is willing to negotiate. And we've heard from a lot of our clients that as younger people are coming in, there really are the trainers and the institutional wisdom behind a lot of their companies, so a lot of employers are jumping at the opportunity to keep people that are willing to stay.
There you go. Well, it looks like we do have a couple callers online. We'll get back to our friends Don and Donna in a moment. Dave, good morning. Welcome to the show. What's your question today?
I was interested. I read an article this week from the Wall Street Journal dealing with long-term care plans, and it was talking about their viability, kind of, and my wife and I both have Genworth plans, and I was concerned with, is it something I should continue to do, or, what's the future, hold for those plans?
So, well, I guess my first question, Dave, is what type of policy do you have? Do you have a comprehensive policy where you have benefits if you're at home, if you're in?
Yes.
Okay, excellent. And what do you happen to know what your monthly benefit is?
I do not off the top of my head.
No, it's no big deal. I was just curious, but I would say that you've entered into a contract with Genworth, and even if Genworth decided that they weren't going to participate in the Missouri or the Illinois market, they have to honor the contract that they have with you, which is as long as you continue to pay your premium, they're going to maintain the benefit that they've offered to you. Unfortunately, I didn't read the Wall Street Journal article, but what I do know is there's a lot of hype around the expense of long-term care. And I think that, and we've discussed this a few times on the show, which is people look at long-term care in a vacuum. How much is it going to cost if myself or my spouse is institutionalized, and then they look to fund to that benefit. So, for example, in Missouri, for a semi-private room, it's about $6,000 a month. So if you walk into a Genworth rep, they're going to say, oh, well, we have a policy, we can provide it to you, it'll create $6,000 a month of income for you. But what you're leaving out of the equation is your Social Security, your wife's Social Security, income that you're receiving from investments.
Right. Probably RMDs at that point.
Exactly, probably things that you're forced to take out of your retirement accounts. Pensions, things like that. So when you add all of those numbers up, they're not going to stop. And then if we do have to add $6,000 of expense to what you were already spending, or to a reduced amount of what you're spending, because in reality, if a spouse is institutionalized, your spending decreases pretty significantly because, one, you're not doing all those fun things you used to do with your spouse. You're not going out anymore. The spouse is usually going back and forth from the institution, or they're the primary caregiver. So your general expenses will drop. We're probably going to add $6,000 to your expenses. And then how much do you actually need from the policy to make up the difference after we've removed Social Security, pension, and money from your investments? And so that's the reason why, at least we believe, that long-term care is an excellent additional income source for you. It's just not the only income source. So if you look at it with a more broad scope, I think it's an excellent way to help protect and create that create that protection for your finances.
Yeah, Dave, and getting back to your original question also here is, I wouldn't be concerned at this moment about the viability of Genworth or any other insurance carrier in terms of meeting the claims obligation.
Because it's also not the only.
They have contractual ones. They can't kick you out for any reason as long as you pay your premiums on a timely basis. Now, most of the major companies, whether it's Prudential, Allianz, Transamerica,
Mutual of Omaha is another large provider.
A lot of the big companies have withdrawn from the market. That doesn't mean that they're not going to be honoring their CNA, one of the first big ones that was in there. They're not going to honor their obligations. It's just that they're not issuing new contracts. So relax on that.
Yeah.
You'll be in a good place.
Yeah. I mean, there were people. We were kind of, I would say, second generation coming in, but there were people older than us that had these plans that they became so expensive by the end. Their premiums had gone up so high they really couldn't afford to continue them for what they thought those payments were going to be on the monthly basis.
And I think, Dave, that's why I kind of asked what your benefit was, because you want to maybe evaluate that and see if you can reduce the benefit if you've accidentally or potentially purchased more than you need. That can help keep your premium in check.
And Dave, we do appreciate your call. And I was going to say that as a closing here, as Aaron was really saying, we really look at long-term care as almost like disability insurance. It's there to add that additional layer that you need. In many cases, what we're doing, I would say, what do you think, Aaron, 50% plus, is that we're recommending clients reduce the amount that they have because they've overbought.
Oh, absolutely. If we have the ability to reduce your benefit, in general, we have reduced it because most people do purchase in a vacuum. Now, if you have a special benefit that we can't repurchase for you, we're not going to recommend
like a lifetime benefit.
Like a lifetime benefit. We're not going to throw the baby out with the bathwater. We're just going to try to figure out how to pay that premium for you.
Cool, and we've had Lynn holding for a few minutes. Lynn, good morning. Welcome to the show. Thanks so much for holding on.
Hi, good morning.
Good morning.
I enjoy your show.
Thank you.
Here's my question. I'm 62. My husband is 62. He's not going to retire for another couple of years, 2 years probably. I really was a housewife and mother all my life, so my Social Security isn't very much, like $200 a month if I take mine. Could I take mine now and then bump up to his when he retires, or do I have to wait and just till he retires to take the total amount?
No.
If you take the benefit, right, if you take your benefit early,
yes,
you are locked into your benefit. You cannot switch over.
So you don't want to.
So don't do it.
Right. Oh, no, I'm not. That's why I wanted to check with you before.
Yeah. Again, you'll want to talk to Social Security. The problem is Lynn, is that you're a youngster. If you had turned 62 if your birthday was before January 1st of 1954, then what happens is you would have had those options, but the Congress got together in the middle of the night and changed those so that
the only time they actually ever did anything.
Right. So there used to be a thing where I could take mine and I could take mine or suspend mine, take off my husband's record, etc. Most of that's been gotten rid of at this particular moment.
Okay. Somebody had said to me they thought I could do that, and I said, well, I didn't know, but I know I listened to you all, so I wanted to check and see.
We appreciate your call on that, Lynn, and the bottom line is the final arbiter on all these deals is the Social Security Administration.
Yes.
So, and also, if you like to, and I do send these out, I have another client that called the other day on a similar matter. You can go to Social Security's website, socialsecurity.gov, and just look up, just put in the browser spousal benefit.
And they actually explain it. They explain it in a really great way because what they'll do is say, almost like they're telling a story. Lynn is 62 and her husband is XYZ, and this is what's happened in this situation. Yeah. What can they do? So it puts it in terms in which are very easy to understand versus the jargon that you get from a lot of other government websites where you're literally reading legislation, and that really doesn't serve anyone. So the Social Security website is an actual wealth of information.
Yes, and I've actually I've got the link to that page.
Well, in this rare occasion, I will say please email jeff@jblfinancial.com if you are looking for the direct link to that information.
Yeah, it's great. And, again, the Social Security website is extremely user-friendly.
Yeah, also, you don't have to wait on hold.
It was not written by bureaucrats.
You're right. You don't have to wait on hold, nor do you have to sit in a waiting room to get your answers, at least if it's a pretty general one, kind of like, can I take this benefit, or what are my options? So
yes, and they're really very thorough on it. So what's kind of cool is that, we were just, again, previous with our rock stars, Dawn and Dawn. We found they were nervous when they came in, like many folks are, because there's uncertainty in terms of health care. There's uncertainty about, can I create the income that I need? After we were able to answer some of those questions for them, the third question that came up very quickly was, with this pension, which I could either take $1,300 a month,
right,
or I could take this $230,000 lump sum, which is a better deal for me. And I think that really is a personalized answer on a couple levels. Number one is that if, in fact, in their particular case, they were interested in taking the capital, or having the opportunity, at least, hopefully, having the capital to pass that on to their children. As you know, if you do elect a pension option, that capital that is really supporting that pension benefit that's inside that plan, when either you pass away and or if you're married, if your spouse, it stops. Right. So the capital never goes there. They felt, and actually she was kind of predisposed to say, can I retire and can I take the lump sum benefit? Is it possible to do? Will it work? In our minds, the answer was yes. So she takes on a little risk because what happens is we'll be investing the money without a pension guarantee, per se.
Yes.
But at the same time, because of the level of assets that they have, we felt that their withdrawal rate
was low enough.
Exactly. Between 3 and 2, the 3 going in theory eventually to 2%. but certainly in a safety zone enough that they can afford to take that level of risk.
And that's really one of the questions that you should ask yourself if you, too, have the option like Donna, can I take the lump sum or can I take the pension, or should I take the pension, which is one, do you have a desire to pass capital on to your children? Another question that we discussed was, do I need the full $1,300 per month or whatever your pension benefit is?
Also, how are you healthy?
Yeah, right. Because if you're not in good health, really the pension plan wins. Because just like when people are thinking about Social Security, should I take it now or should I wait? Well, if you're in good health, let's wait because you'll have longer to take that Social Security or the pension. But if you're not in good health, you're really getting far less benefit than you worked for.
And it's interesting because these folks obviously were a year from retirement, so we took our next steps, which was we assisted them and made some recommendations for them in regard to Donna's 401k program. We looked at her options. She offered to, and we declined, but she offered for us to take over it through an in-service distribution. And we're like, no, we'll wait.
Yeah,
let's save the fee. Let us assist you if we can in terms of making some recommendations. She obviously made her final choices. That was great. And with them, every 6 months, what they're going to be doing is touching base with us, right?
Right, because they had some goals. They wanted to keep paying down the mortgage. We want to see where they are on that and see if they'd like some, based on what our rebalancing is for our clients. Should we rebalance in her 401k, things like that. And then we'll see them when she's ready to enjoy retirement with Don.
And the fun part is with folks that are within a couple of years of retirement, what we're really doing is kind of laying, as I like to call it, even though compliance doesn't like it, the yellow brick road, right?
The pre-game plan.
Right. We're really laying down kind of the path. These are the times that we're going to do things. This is our game plan in terms of events. This is how we're going to eventually invest the money. We talk about that at our office. So if you are between the ages of 55 and 75, those who would like to retire or are ready to retire, give us a call, 314-863-0008.
The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial advisor, or tax advisor prior to investing. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Private Advisor Group, a registered investment advisor. Private Advisor Group and JBL Financial Services, Inc. are separate entities from LPL Financial.
This is Jeff Lapidus, the Retirement Coach. We'll be back next week at 10 a.m. here on the Big 550 KTRS.